Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. This series is all about giving investors some ideas, the starting point for your research, a few things to consider when you're investing in 2025. So continuing with that theme, today we're looking at 3 companies you may not have heard of. As always, this is general information only. You should always seek independent advice before making investment decisions. Matthew Kidman is the principal at Centennial Asset Management. Matthew, welcome back to Fear and Greed.
Hi, Sean. Thanks for having me.
You've been prepped on this one. 3 stocks that we haven't heard about. Stock number 1 is?
It's a company called Dropsuite, code DSE, in the technology space. So one of the big problems with technology is security, as we know, and there's a lot of products that you can buy to help secure what you've got at work or at home. Dropsuite primarily concentrates on Office 365. As we know, we've gone to the cloud with Microsoft, and it allows you to back up your Microsoft 365. Now, that doesn't sound exciting, because doesn't Microsoft do that? Microsoft doesn't really do it in any meaningful way, but Dropsuite does, and it has been growing, and especially with the SME type market, it's been able to grow the size of its customers, and it's also been able to grow the amount of their customers. It's run at break even. It's capped about 400 million, or maybe a bit less, $350 million worth. Got a decent balance sheet, and it runs at about break even as it grows at that 20 to 30% pace. We kind of like that. We've watched it for a long time. It's executed well, not cheap, structural growth, but we do think it's got, a lot of growth to go over the next 2 or 3 years.
Okay, number 1's Dropsuite. Number 2?
Well, you've probably heard of this, but it's probably been off the radar, which fits into the category, I think, which is Adairs. Nice old retailer. It's got an online business called Mockup, but primarily the old storefront, selling you furniture and home goods. Adairs has been a real problem child. Had a boom like most retailers in COVID. It exceeded all profitability, especially around the margin front. As we know, we stayed at home and spent money on our house. Then it all dropped off the edge of a cliff. And guess what? At the same time, interest rates went up. Adairs' balance sheet was too geared, so it got hit from a couple of different angles. Stock price went down about 70%. And the other issue they had was that they, at the same time as doing all that, they were building a new distribution centre, which when they moved in there, it just didn't work. They had to get rid of the third-party process, go in, take it for themselves. Now it's operating, as we see the last couple of updates, it's actually sales have started to grow. And if we get a couple of interest rate cuts, it'll pick up on that cyclical element that we like as we get deeper into 2025. Balance sheet's getting a bit better, debt's down, distribution centre working okay, back on its feet, balance sheet repair. We think there's a bit of upside in Adairs.
Dropsuite 1, Adairs 2. Number 3?
Well, I'm going to go with one that's been an absolute banger over the last year or so, and it's in a really high growth part of the market. So it's risky in the sense that it's gone up a lot. It was incredibly cheap, and it's one called SKS Technologies. SKS basically is a commercial electrician. And what I mean by that, it wires big buildings, might wire universities, hospitals, might do a commercial building in the city, even though that's a bit more competitive. And the more recent one that it does sector is data centers. As we know, that's the boom product. And a lot of the equipment that goes into a data center, it's a shed with a lot of electronics, because we know it needs a lot of power to run those servers that sit in there and allow you to access the cloud or premise work. It's done really well. The stock has gone up about 5 or 6 times in the last 12 months. And you say, well, I've missed the boat. I don't think so. I think it's getting into bigger projects, and I think that it can grow at an above average rate over the next 2 years if it continues to execute well. There's always risk around that, but we think they're executing really nicely, and that they're increasing their margins at the moment because of the demand for this product. Electricians are in big demand, and if you can get access to them, you can charge at higher rates. So margins improving, revenue improving, and it's on about 13 or 14 times. But we think that can probably grow at 25, 30% over the next couple of years. So there's plenty of upside in that.
Balance sheet, Matthew, you always talk balance sheets. You haven't mentioned SKS's balance sheet.
Improved a lot. A lot. Did have a line of credit. There was a lot of talk around in the market. They needed to raise money because of the amount of work they were taking on. Their last update was a really good one where they said that actually we're net cash now. Our line of credit, we don't need new equity. The line of credit is still there. We're not tapping into it because we've collected our money at such a good speed. We're net cash at the moment. So yes, Sean, good question. I'm glad I had an answer for it.
Fantastic. So we have Dropsuite, Adairs, SKS, all very different parts of the market, all improve good or improving balance sheets. There's a theme there. Matthew, thank you for joining us today.
Thanks, Sean.
That was Matthew Kidman from Centennial Asset Management. Remember to get your own independent advice before making decisions. This is Fear and Greed Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt, managing real-time risk. Get $1,000 off at vanta.com/fearandgreed. I'm Sean Aylmer. Enjoy your day.